It's a brand new week. Good morning, everyone. Welcome to this fresh week where we have lots of opportunities to have conversations on current and relevant topics on the economy and business. I'm Ini John Mekwa, and this is Business Morning. It's 55 minutes of current and relevant business talks, and we start, as we usually do, from the global oil space, where prices rose today, recouping part of last week's 4% slide as concerns over potential disruptions from escalating U.S.-Venezuela tensions outweighed lingering oversupply worries and the effect of a potential Russia-Ukraine peace deal. So we see the numbers this Monday morning. 0.54% in the green territory. That's what Brent has at $61.45 a barrel. WTI is also about the same range in the green zone, $57.76 a barrel. Still, with markets lacking clear direction, oversupply concerns remain strong. And unless geopolitical risks escalate sharply, WTI could fall below $55 early next year. Ukrainian President Volodymyr Zelensky has offered to drop his country's aspiration to join NATO military alliance as he's held 5 hours of talks with U.S. envoy in Berlin. That happened yesterday. Negotiations are set to continue today. On Friday, Ukraine's military said it attacked a major Russian oil refinery northeast of Moscow, according to people who are in that area. And then moving away from oil to the markets here in Nigeria, pleasant surprise happened on Friday where the market gained almost ₦1 trillion, and that positioned the market in a positive territory for the week. So at the close of the week's trade, we saw the oil share gained 1.63%, almost 150,000. We hope to hit that before the end of this week. Equity cap was also up 1.64% at 95.264 trillion naira. Activity chart was mostly red, however, compared to the previous week. Only deals we saw in the green. 110,736 sectors had mostly positive, but banking closed in the negative 0.12%. Consumer goods 2.64% in the green territory. Dangote Sugar contributed a whole lot to that. Industrial goods also positive, not so much. Insurance, however, is back on the tracks for investors. Oil and gas, however, closed negative. Top gainers were Morrison Industries, Mikio Industries, and Japan Gold and Ventures at the close of trade. See their gains there. Morrison, more than 32% change. Mikio, about 27%. And then Japan Gold, 26.67% at the close of trade. On the flip side, we have the losers, Etana PLC, UACN, and eTransact. They lost about 14%, and 10% at the close of the week straight. Top trades, eTransact, Access Holdings, and FCMB Group PLC. Now, today, we're expecting the MBS to release inflation for the month of November. Before that, economic and policy firm, financial derivatives company, they are expecting that the inflation number today will decline further to 14.45%. That's down from what it is currently, 16.05%, recorded in October. The forecast, which comes ahead of that official inflation report by the NBS, that's the National Bureau of Statistics, would mark the 8th consecutive month of disinflation if it matches the NBS data. The FDC attributes this drop or further drop in the country's inflation to ample food supply, stable naira exchange rate, and base year effect. Further highlights of FDC's forecast expect food inflation rates to go to lower to 12.05% and core inflation 17.05%, which would mark the 4th and 5th consecutive month decline accordingly. Now, the Center for Promotion of Private Enterprise, CPPE, has asked the federal government to adopt a clear and credible roadmap for cost-reflective electricity tariffs. According to the Economic and Policy Advisory Firm, this will enable the clearance of the current 4 trillion naira debts within the sector. In a statement signed by its CEO, Dr. Muda Yusuf, the CPPE says that the current financing model of the power sector is fiscally unsustainable, while repeated government interventions without deep structural reforms would only deeper the crisis. So the challenges, according to CPPE, include and they're asking for adoption of that clear and credible roadmap. They said that this move, that's adopting the cost-reflective electricity tariff, but in phases, and not as a whole, in phases, that to enable clearance of the 4 trillion debt, which the government has said they're going to use the bond, to clear within the sector. The current financing model is not sustainable, according to CPPE, repeated government interventions, and government should adjust intervention and implementation into phased and predictable transition to cost-reflective. Absence of cost-reflective pricing subsidy dependence has deepened the liquidity price crisis. And we saw even in the papers this morning, this was a major one, the power sector reform. We hope to settle on this tomorrow on Business Morning to give more highlight to it. The 2025 Africa Integration Report by the African Union highlights uneven but moderate gains in integration pillars, which are political, economic, infrastructure, and social, while stressing that implementation lags behind ambition, with intra-African trade still low, between 16 and 18%. The Global African Heroes Summit draws attention to some of these key issues that was held over the weekend. Uniting Africa and its resources is at the fore of the 13th edition of the Global African Heroes Awards and Business Summit, with the theme Africa Reimagined, Innovation, Inclusion and Sustainable Growth.
Africa's future will not be written by chance. It will be written by visionaries, builders, doers, and innovators who understand that progress is not a gift, it is a responsibility. We cannot speak of a reimagined Africa without acknowledging the people who make that vision possible.
Africa starts as an intersection where demographic dynamism, technological advancement, and a rapidly shifting global economic landscape offer both unprecedented opportunities and urgent challenges. To reimagine Africa is to question outdated assumptions, disrupt apathy, and embrace a developmental model anchored on knowledge, productivity, and shared prosperity.
A critical sector for Africa's reemergence is the aviation. The Chief Executive Officer of Air Peace Limited, Dr. Alan Onyema, gives progress reports.
Under this regime, an indigenous airline fought the world and crashed the fares of international travel within 24 hours, courtesy of the support we received from the federal government and the minister. On that night, when the breaking news hit the news waves, all the foreign airlines brought down their fares by about 70%. This happened, and it's still happening.
However, Dr. Onyema notes that there are still many areas of operations which require attention.
Excessive taxation in the system is also hindering connectivity, hindering the capacity development of the airlines. And this is what we are trying to address with the government. And to God be the glory, the present government is listening to us. Remember, my country, your country, in the last 15 years was stigmatized. The leasing world said Nigeria is unsafe, Nigeria is not good, the security situation in Nigeria is not good. Because of that, they raised the insurance. Because of that, they refused to give you dry lease. Most of these airlines from the other climes, they don't really own those planes. All they need to do is to go to Boeing, Airbus, or Embraer and make an order. Then the financier steps in, the leasing company steps in, buys it. When they buy it, they lease it back to these airlines. And you see their fleet growing to 800, 1,000 planes. In Nigeria, you as the owner of the airline must own that aircraft or those aircraft yourself.
As Africa's integration continues to drive gatherings such as this, government on the continent have the major role of creating more incentives for private sector participation. And now let's discuss tax. In a couple of weeks, the new tax law will set in Nigeria, and it changes a whole lot of things. There's a calculator. We've discussed that here on the program. If you haven't seen it, please check our YouTube channel and you'll see how you can calculate your new tax. Don't get cheated by an employer or any other person or consultant. But let's look at some of those gray areas or controversies or controversial clauses or areas that people have been worried about when it comes to the new tax law, which starts on the first day in January. I have right here in the studio to help us dissect that Mr. Ladijo Adeyemi is the Associate Director, Commercial Practice at Anderson, Nigeria. Mr. Adeyemi, good morning and welcome to the program.
Morning, Nini, and thanks for having me.
Good to have you. So I'm sure in your interactions, you've been hearing of some controversies. What are some of those most controversial areas you've heard about?
Okay, there have been quite a number of them. I think generally Nigerians are just uncomfortable with the fact that a lot of things are changing. It's the first time we're having this level of overall, over our taxing framework. So with all of those changes, I mean, it's just kind of expected that there would be concerns, that quotas will raise. But I think topmost in the list of those is, of course, as you would expect, the ones that would affect the SMEs. It's the fact that tax identification and tax ID registration and all of that, So that part has really been concerning for a lot of people, especially where people have heard that the banks are going to be having reporting obligations and you may not be able to do certain transactions except you are tax registered.
Okay, so you are a professional, yeah? So you will help us clear some of these misgivings, because when you talk to Mr. Taiwo Yedele and he talks to you about some of these changes, it's supposed to be for the good of the small businesses and small salary earners. So one would wonder, and he's shared experience of how he's been harassed, and when he explains some of those things to such individuals, they switch to the other side. So I believe you have full knowledge of some of this. You're going to be one of those,
Absolutely.
Exactly. So when you talked about the small businesses, I mean, let's not just follow. I know we have a list, but let's just do it from how it goes. The small businesses and the issue of the tax identification number. How is it supposed to work? What is new?
You see, in Nigeria, there has always been the law, and there's always been what people believe to be the law, right? So that belief may be kind of more even important than the fine prints and the fine details of the law. And you cannot blame the people, when Taiwo said, they are turning his words around and all of that. You have deepened level of mistrust in the nation, where you've seen promises given over and over, and those promises have not been kept. So with the people, it's just like, you're pouring new wine.
Again.
Exactly, new wine into the old wine. So it really doesn't matter what you are saying. People believe this thing you are saying is not going to be for our ultimate benefit. But to get to the answer to the question that you've raised, now, if you are a small business, for instance, what the government had thought to do is, before now, even currently, because the new law is going to kick effect by 1st of January. Currently, if your revenue is 25 million, right, you do not have, your tax rate is going to be 0%.
25 million a quarter?
25 million naira for an annum, per annum, for a whole year, currently. So you have 2 weeks for that to subsist, right? From 1st of January, that threshold, I mean, speaking about the good that the government has done, that has not really been well understood. That threshold has been pushed to 50 million, 100 million, depending on the tax law.
I thought it was 100 million, 25 a quarter.
There's a little challenge with that, and I'll tell you where.
So those are the little prints which the people are afraid of.
You see, the Nigeria Tax Act, which is the principal act, says 50 million.
50 million, please help me quantify. 50 million an annum.
Per annum.
Okay. So if you are the threshold of below 50 million an annum, right now,
yes, by 1st
of January, yes, you don't pay any tax.
Exactly. And in doing so, that law says small company, right? Then Nigeria Tax Administration Act, which should give you details of tax affair, returns, and all of that, in defining small business, then says 100 million. So there are two major thresholds. You are looking at the revenue threshold and you're looking at your asset quantum. The quantum of the asset should also not be more than 250 million. Both laws agree on the 250 million part, right? Whether it's small company or small business, semantics, right? But the first one, which is Nigeria Tax Act, says 50 million, and Nigeria Tax Administration Act says 100 million. You know, so I think that must have just been final error, alignment, changes, and so however you look at it, whether you're saying 50 million or 100 million, you are safe. But the fact remains that it's been moved from 25 million to that much. So look at that. That is like doubling or even quadrupling, you know, the threshold that currently subsists. That's a good thing. There's no way that should not earn the government something good, right? But the fact remains that even when it was 25 million, there was an obligation to still file returns. You're not going to pay taxes, but declare that this is the much you've made. That obligation, it's not new. It has always been in the law, at least since the time of the Finance Act. You know, but you've got citizens and individuals that have become used to doing their thing regardless of what the law says. Why? Because, I mean, you know, tax is a social contract, right? I pay my taxes with the expectation that the government is going to fix certain things for me. Over the years, citizens have been, so it's not new. So when Taiwo said it's been harassed, people, it should really not come as a surprise, because citizens are used to doing some of these things themselves over the years, you know. So it's like one side of the contract had not been fulfilled. So now you're coming with the big stick, you know, lacing it
and the threat of real enforcement.
Exactly. So people,
that there'll be no leakage.
People are not looking at the good that you really intended. They are looking at, oh, finally, they want to forcefully drag me into this net. That's what is causing the contention. But in terms of what the law has done, the law is recognizing the fact that you're a small business. I don't want to encumber you with the administrative burden of certain things just yet. While you are growing the business, focus on growing the business, and I'm going to tax you only at 0%.
Okay, so when we now talk about, you know, having that compulsorily active tax identification number, it's just because the government wants to follow up on your activities and ensure that you're reporting, even when you're paying 0% of tax. So it doesn't mean that, because I've heard that from January now, even if you do a transfer, you need to put, even if it's 25,000 naira, you have to put it, or else you'll be asked to pay tax and all of that. And I did ask Mr. Oyedele that, and he told me that yes, there's going to be more scrutiny.
Absolutely.
You know, of all those transfers.
Absolutely.
But the threshold is actually 25 million naira.
Exactly.
So if banks want to follow up with 25,000 naira and 5,000 naira, I wonder how many staff they will need, you know, to follow up with all of that. You know,
in some of the things that are now gaining popularity, you know, are the things that should have come up in the past. The fact that you want to do transfer, the nomenclature of the transaction should be clear. It's not something that anybody should be saying by now. You are doing business, right? And if what you are doing is a business transaction, you should be able to say this is what this is, so that when push comes to shove, at any point in time, you can always refer to what precisely that transaction was. But remember what I said, citizens have become comfortable. It's like there's an agreement that, you know what, I'm not going to bother you, right? Don't bother me as well. I won't bother you with the amenities. I'm going to fix my power, my light, and all of that. You know, my road, even in some instances, myself, my security to a large extent. And don't also bother me with taxes. So the SMEs have gotten used to not doing anything over the period. So now when you're saying, oh, before you are able to operate your bank, you would need your tax ID. Then a lot of people become kind of uncomfortable to say,
because we don't know what it will look like, what changes
exactly.
it will come
but
with
the
it.
catch really in it is that the taxing regime still requires you as an individual or as a corporate, to declare. So the regime is still based on self-assessment. So nobody is going to go into your bank. I've heard all sorts. People have set up ring lights to say all manners of things. Nobody is going to go into your bank account and say, this 100 million you have or this 30 million, this is your tax, I'm taking it. That is never going to happen. If that happens, then that is not in line with the provisions of any law.
So we also had in battle, that's Mr. Oyedele, that's VAT revenue allocation with the politicians, and he was faced with the reality of political power and political will.
That's another good thing, because if you look at what obtained, before 1st of January and what currently subsists, what has changed now is that the sharing formula has been even more explicitly defined. With the federal government now getting reduced share of 10%, the state government and the FCT getting 55%, and then the local government getting 35%. And it doesn't stop there, nothing can be clearer than what we currently have, because now the portions of the state and the local government would then be further, stripped to certain, using certain principles like equality. 50% of that quantum is going to be further shared equally, 20% is going to be shared based on population contribution, right? And 30% is going to be shared based on consumption. So if the VAT is actually consumed in your state, right, it means you're going to get more. If you are a state of X population, it's going to impact what comes to you, as opposed to what we had before, where it's just blatant. So you can have a particular state, which was the bane for the agitation at the time. Those were the challenges that he faced and his committee faced at the time this law was, in the works. Because a state like Lagos, for instance, we say, oh, all of the, activities are happening here. I shouldn't be getting, the same vote with one state that is, that is not really doing activity. So those are the issues. So those things, again, that's another good that has been done, explicitly defined, properly broken down to show that, there are certain principles that should guide these things and not just based on collective, contribution and then just let everybody feel good, which was
but it seems like this good will hardly be appreciated because of that lack of trust, which you talk about. And I think that even though it seems to be outside the purview of the presidential committee, but ensuring that, yes, I'll pay my tax, but can you assure me that my tax will be used as it's supposed to be? You said it's a social contract.
Absolutely.
It's a two-way thing. Now you're ensuring that I report my earnings, whether I'm paying tax or not. At least when I get to the threshold, then I can start paying tax. But who are you following up to ensure that those monies are being used for what they ought to do? And I'm not still sourcing for funds to do my road and my electricity and all that.
That's the second bit of, that's the other end of the stick, right? And you see what the government is also aware that the trust threshold is kind of low, because now, other than the Taiwo committee, the fiscal reform committee, the government had newly set up another committee, called the National Tax Policy Implementation Committee. That committee is also supposed to galvanize stakeholders, ensure that implementation is smooth. It's headed by Joseph Tegbe, and of course it's going to be working hand in hand with the committee that bathed, the tax laws in itself. So I believe that some of those initiatives are to address some of those yearnings. So you can expect that the mistrust is not going to disappear suddenly. It will be.
But if we smell the political will to block those leakages, I know it will help a lot. Thank you so much.
With you completely.
Thank you so much, Associate Director, Commercial Practice, Anderson, Nigeria, Mr. Oladejo Adeyemi. Thank you for your time.
Thank you for having me.
Let's have a break now. When we come back, innovations in the healthcare sector will be our conversation. Please stay with us. welcome back. It's still Business Morning right here on Channels Television. Now, last week, there was an event, Access to Markets, and the whole thing was about Innovate Africa, and there was a whole lot of attention on the healthcare sector. We had innovators in that sector coming together, talking about breaking supply chain barriers and some of those hurdles, on the African continent that has stopped us from maximizing it. And I had some interesting innovations there, which is why I thought we should follow up on that conversation. And we're having this conversation with the Director Operations at Sproxil, Ibrahim Alabi. Sproxil is one of the innovators at that event. Hi, Ibrahim. Good morning and welcome to the program.
Good morning. Thank you very much.
So, I heard you guys have some very innovative ideas that could help, especially people in the rural areas, because I had a lot of things about in native language, what can guide people and direct people in taking their drugs and medications.
Well, thank you very much, and nice to be here. So what Sproxil does is making those day-to-day healthcare activity, the basics, turning them to actionable intelligence on a national scale. I'm sorry, let me break that down. So if you've used you must have come across pharmaceutical products where you scratch the panel and confirm if it's genuine and all that, right? Now you would know that those products, as long as there's malaria somewhere, there'll be a malaria product. So Nigeria has a huge malaria burden, right? So there's basically malaria in every part of Nigeria. So which means the most rural part of Nigeria has some malaria products pack, right? And when that pack has a sticker, which is also most of it powered by Sproxil, we've been working with NAFDAC for about 15 years, where we have those stickers and you can text and confirm it's genuine and all that. Now, with that, when those packs go to those rural areas, every part of Nigeria, like as long as there's malaria, there's a pack of malaria, it means you can reach people depending on the kind of solution you are providing to them. So what those things do is that when people scratch and get and verify, right, genuine or not, we've gone a step higher, and over the last 15 years, we've had our scratch panel on about 4.5 billion products across different products and all that. Now, people are able to, you can now get intelligence from people to say, as soon as you scratch, you get another message. After you get product genuine, right? Another message asking you some questions. For instance, you're taking the malaria products. Did you test before you did malaria? Because this information, this intelligence is very key for the elimination of malaria. Because when people begin to take medicine without testing, you get to resistance and all that. We've gone past it with days of monotherapy, where products, we've moved to ACT now, where combination therapy, because there has been some resistance in past to the likes of chloroquine and all that. So when people scratch and get that message, say, give us some information. Did you test? Right? How much did you buy this product? Right? Did you get it from, did you go to a government hospital? Or you went to PPM, which are the local, what you call your typical chemists, the patent medicine vendors. So by getting this intelligence, right, we are able to support, and we have partnership with, formalized partnership with government agencies. NAFDAC is already there 15 years, the anti-counterfeiting. Now, during the I3, there was a MOU we signed, the National Malaria
with the elimination program.
The whole idea is provide this intelligence, actionable intelligence, on a national scale. And we are basically partnering. There's been intelligence before. What we are doing is improving on that real time. So in the past, or usually when you're trying to get surveys or get data of malaria, boots on the ground, people go around, training for several weeks and months, you go down, then you gather the data, you analyze, and those things are done every 3, 4, 5 years. So you might be doing some program on malaria today, but it's based on data from 3 years. But what we are saying is that those data, you can keep refreshing them actually on a daily basis. So same questions, did you test for malaria? How are you sure you have malaria? And more, many questions, a whole lot of questions. And those intelligence come in real time, and we can now disseminate and share with partners, right? So that is a part of it, ability to provide real-time actionable intelligence on a national scale, right? Also, in that process, health-seeking behavior, the part of what the NMEP, the National Malaria Education Program, is trying to achieve is people testing. I mentioned that before treating, which means what you call the rapid diagnostic test kits, right? So when you go to a pharmacy or a PPMB, your local patent, Right, there's always that happens beyond the big pharmacies, the local guys, and they're regulated. They are not illegal. Government regulates them. So when you go to those areas, you have the test kits, and you test for, do you have malaria? And you can go beyond malaria, but malaria is this particular focus of that MOU. When you test, the PPMV, which is let me call it the chemist, your local chemist or pharmacist, if we put some 2D barcodes on those kits, your small kits, a 2D barcode. What happens is when you get the test results, or when you do that test, you take a picture of it, via WhatsApp, send it to a particular phone number. We have an AI system that will read that test result and tell you if it's positive or negative. Now, what does that do? Firstly, it tells you there's no mistake in terms of is it positive or negative. That's part one. But the part two of it is that you can build a national map of test positivity rates. So everywhere, every town, because it's geolocated, when you send it, you are going to get your geolocation. So assuming, for instance, today, 1,000 people use that kit across Nigeria, right? You are able to get the test positivity rates of malaria, and of course, again, you can go beyond malaria. Real time in Nigeria, because it goes live into a live dashboard, is analyzed, and you can see real time how many people went there to report malaria, how many people got tested, how many people actually got positive on malaria. Because if you look at Lagos State data, for instance, Lagos State government is saying, in reality, based on the program they are doing in their government hospitals, about 3 to 5% of people that complain of malaria, that say, I have fever, I'm going to take malaria product. When they test them, as far as Lagos is based on reports from Lagos, just about 5%.
What about from your data using this system?
Yeah, so we've gone different states, right? We've done Kano, we've done all that. It varies across the states. Lagos, of course, seems to be in the best position. Somewhere higher, when you go high up, the prevalence rate is higher. Some are 15%, some states are 25%. It varies across states. But what our system uses is that instead of waiting for years or months to get this data, you can do intervention programs today.
Exactly. So because that's what I wanted to ask.
Yes.
I'm glad that you have an MOU with the Malaria Elimination Program,
yes,
which is the government. So if, someone was sharing experience of how during COVID, when they needed government intervention, they just had an arm that had data. And then you know where to. So all this wonderful, he's not getting to who he's supposed to get to. So if the government is really serious, obviously, about dealing with an issue, because if we say what causes malaria, then we look at, of course, the environmental and the
those questions are asked too, right?
Exactly. So the data directs the government intervention and policy. That is, if the government would really want to use it. I wonder how much closeness you have, with the government, because this is an important data that paints the picture of the reality at least in the health sector for Nigeria.
Yes, I can say for free, right? The current administration, the current health minister, Dr. Alepate, with NMEP working closely. I include PVAC, the president in charge of the value chain in the health industry, right? There's so much interest in using this data, right? The stats, when we've worked with them, you can see the energy, again, coming from the minister himself, and we know who he is. His record is there to speak for itself. They really do want that data, which is what crystallized into signing up that MOU. Because ultimately, like he says, you are not going to solve this problem without having actionable and real-time data. And that is key. It's not that there's data and we can't run away from it. The NMEP is very good in collecting data. But however, what we are doing is improving what is on ground and reducing those blind spots, right? Because the kind of data we get, you can actually filter down to the town and states. So let's assume, that there are things called malaria vaccines now. If you put the malaria vaccine intervention there, you want to know who got it, from where. Part of this solution, which is when it comes to even traceability, track and trace in supply chain, is saying if I send this to XYZ states, right, from warehouse A, did all the, let's say, 1 million units I sent, did it get there? Because by putting 2D barcodes on those packs, you scan at each level. So you know that when you're doing an intervention, if 1 million left here and only 500,000 was scanned, you realize that something got missing in between. So when government is doing intervention, government is looking at costs. So there are some programs government may want to do to say reduce the cost. But if the cost is reduced, it can find a way into the black market. So by that data, you can track and trace where each and every one of those things are going. At the level of the pharmacy, right, or the PPMV, you can get results on test positivity rates by using these RDTs, rapid diagnostic tests, right? And at the level of the consumer, firstly, consumer can also, and say our technology can also verify if it's genuine, and even government could ask questions further to say, this product you buy, how much did you buy it? This is now information directly from the user. How much did you buy it? Where did you buy it from? Right? And all that. So this level of intelligence is there, and the government, I can tell you for free, are very much willing in using it, which again can culminate into us signing that MOU.
And is it too early for us to expect an African outlook of all of this? Should we just deal with our home problem first?
No, it's all interrelated, right? Only that there are different regulations for different countries, right? But the solution itself is a pan-African, work anywhere. And the thing about it is that it's a localized solution, is by Nigerians. So sometimes there are solutions to bring in, but some of the things that I do is not localized for what you require in the Nigerian and even African context, right? But definitely that solution, again, putting 2D barcodes on RDTs, is just for you to snap and send to a phone number, and we interpret, and you can do this map across Africa. So we are a bit already in Kenya with some of our solutions. We're already looking at moving across Africa. But knowing that Nigeria itself is about one in 4 cases of malaria is from Nigeria.
Yes.
About 1 in 3 deaths.
The headquarters
of
malaria.
So there's a huge problem to be solved in Nigeria. However, that solution ultimately is a Pan-African solution, which we are working on. And again, because of the regulation, it might be slower, but definitely slow and steady, we get across Africa.
The race. All right. Thank you so much. And we surely hope that it might be slow, but it's steady and progressive. Thank you so much, Director of Operations at Proxil, Ibrahim Alabi, for your time.
Thank you so much. It was nice being here.
Same here. All right, just before we go to the global space, there's the Public and Private Development Center. They're saying that the suspension of foreign aid, as announced by the United States, that's no longer news, has disrupted operations and forced it to lay off. Here in Nigeria, the impact is also being debated. How much impact are these cuts in international or foreign aids? But it also comes with opportunities, according to the Department of Economic and Social Affairs at the Organization for Economic Cooperation and Development, OECD. So we have Mr. Robin Ogilvie joining us to share some findings as international aid gets reduced. What opportunities are there for Africa and all of that? So that's the conversation we're going to be having next now. And I begin by asking those aid cuts from the OECD's latest tracking. What's the global outlook, Mr. Ogilvie? Is it going to get worse or is it going to get better?
There's no easy way to spin the story. I mean, we've really seen a profound shift in official development cooperation, official development assistance from the 33 traditional donors that we bring together at the OECD in the last couple of years. Total official development assistance peaked around 2022, 2023 at $225 billion, and since then we've seen almost unprecedented declines. We saw a 9% drop in total ODA spending last year. This year we're predicting a drop of anywhere between 9 and 17%. So that's on top of last year's drop. So it's really not looking great. For African countries, particularly for sub-Saharan Africa, this is quite alarming. Again, these are only preliminary estimates, but we may see reductions in aid spending this year amounting to anywhere between 16 and 28% of spend. So it really is quite worrying. Globally, it's particularly worrying for Africa, also as it's home to many, if not most, of the world's least developed countries.
So what sectors are mostly affected by these cuts?
I mean, I think there's several things going on here. The biggest risks are probably in the social sectors, it's education, it's health. I mean, these are areas in which the very rapid rise in aid volumes that we saw in the early 2000s and actually through the 2010s contributed to enormous progress against the Millennium Development Goals and then the Sustainable Development Goals. I mean, this means more kids in school, more kids completing school, fewer women dying in childbirth, reduced infant mortality. And so, there's a real risk of setbacks in these areas, as many of these countries do still depend on international development cooperation in these sectors. I think it's also compounded by the fact that in parts of West Africa, particularly in the Sahel, geopolitics and security developments have made it increasingly difficult for many bilateral donors to operate. Some of our members are moving out of the Sahel, either closing their embassies, closing their physical presence in the Sahel for those reasons. And again, there's a risk of a double whammy, that with the departure of some bilateral development cooperation partners from the region, there's a further exodus of much needed aid funds.
So, I mean, the OECD sees that there are also some opportunities, especially for a country like Nigeria. Where are some of those opportunities that can be maximized at this time?
I mean, first of all, new technologies will never offset a decline in solidarity spending, in spending on official development assistance, and they shouldn't be used as an excuse for reducing aid budgets. But we have to accept that digitalization is with us, digital transformation is happening, and it can bring new opportunities for many developing countries. Nigeria is already reaping many of the rewards. I mean, you have very successful mobile payment systems that have enabled Nigerians to have access, many of them for the first time, to the financial sector. You have now new digital ID infrastructure, which again is part of this ecosystem. You need with a digital ID you can do lots. You can take out loans, you can buy goods and services, you can access government services, and so on. So I don't think it's how can Nigeria benefit from others? I think it's also how can others be inspired by some of these successes in which Nigeria has been a pioneer. And here are a couple of things that we're working on in my organization at the OECD. I mean, one, I'm trying to pull together now a coalition of a consortium of interested donors to look at how, between us, we can use AI technologies to better target the limited aid that our members spend. Second, we are now just signed an agreement with the Bill and Melinda Gates Foundation to launch a new platform for knowledge sharing on digital public infrastructure. So that's about taking examples such as the ones I mentioned in Nigeria, drawing lessons from them, drawing good practices and figuring out how to bring them to scale, both in Nigeria but globally.
And we hear of emerging donors outside the OECD. What are you observing? What trend can we expect in the nearest future?
There's no single emerging donor. And many of them aren't new. Many of them have been around for a long time. They have a long history of mutual support, of solidarity, South-South cooperation. I'm here in the Kingdom of Saudi Arabia. The Saudi Fund for Development was founded in the 1970s. It's older than many of the bilateral aid agencies of the OECD economies that I work with. So it's less about new versus old, but I think it's more about different perspectives. I think that if I take Saudi Arabia, I mean, it's seen by many to be a long-term, trusted partner, willing to work with others, and I think that's been one of its strengths, as well as obviously its strong emphasis and expertise on infrastructure. If I look at others, I mean, Indonesia, for example, G20 economy, a country that's set to join the OECD at some point in the future, is playing now a vital role, particularly in Southeast Asia, in bringing its know-how and expertise, soft skills, institutional knowledge to bear on the reforms that countries in its own region are undertaking. There are also fantastic examples of countries in different regions collaborating in what we call triangular cooperation. I was just reading the other day about a project in which Saudi Arabia partnered with the UK to provide electricity to schools in solar electricity to schools in sub-Saharan Africa, resulting in hundreds of thousands of additional children in school. And so in this model, you can think of each partner as bringing a little bit of what makes them special, or a little bit of their expertise, and pulling it together so that the sum of its parts, so the whole is larger than the sum of its parts.
All right, thank you so much, Mr. Robin Ogilvie from the Department of Economic and Social Affairs at the OECD. They're talking about the aid cuts and the opportunities it presents for a country like Nigeria, which he believes is already being explored. Let's take a break now. When we come back, we'll go global. Please stay with us. That's right. It's time to go global now with Laddie Williams.
Good morning, Ini. Fun fact today, this is the final full trading week of 2025.
Glory.
So whatever you have to do quick.
Do it well.
And do it well. At this point.
And Laddie, did you also know that today is the World Tea Day, International World Tea Day?
Tea? Like tea?
T-E-A.
Drinking?
Yeah.
I love tea.
Fantastic. So it's your day.
So today I'm going to drink all kinds of teas, hibiscus, green tea, all of them at this point to celebrate. All right, let's get a check on what's playing out with the markets. Now we see global markets are bracing for a pivotal week as major central banks, a flood of economic data, that's taking center stage just as liquidity, thins, heading into Christmas and New Year period. Policy decisions from three systemically important central banks. That's the European Central Bank, Bank of England, the Bank of Japan, alongside key inflation, jobs, and consumer data across major economies. That's set to shape expectations on growth, inflation, and interest rates. That's the expectations for this week. All right. To our discussion now, we have central bank meetings. We have the ECB forecasts. They're going to hold interest rates. We have the BOE. We see there's a cut expected. That's from the Bank of England. Then we see for the Bank of Japan, they're expecting a hike of about 25 basis points there. So these are very important economies, and they're going to be deciding on interest rates this week. All right, let's discuss this now. Joining for this conversation, we have Julian Cariguesi, as an economist and former special advisor at the Ministry of Finance in Canada. Great to have you on the show. Good morning.
Good morning, Laddie. Thanks for having me.
Fantastic. It's been a while. So, this week,
yes,
three major central banks, but they're moving in different directions. We have a hold, hike, and a cut, from these banks. Tell us what this divergence is, telling us about the state of the global economy right now.
It's actually very interesting in one way, in terms of real economic growth. The big economic areas of the political West, the United States, Japan, and the Euro area and the UK, they do seem to be converging around growth, although some growth rates are rising and other areas are falling. So there's convergence there, but there's divergence in policy, because when you bring inflation into it, there are different inflation dynamics. So you see inflation in the Euro area decelerating, coming down. Inflation in the United States has been more sticky. Inflation in the United Kingdom has come down, and which is giving them space to reduce interest rates. And you see inflation in Japan much higher now than traditionally in the 1990s and for the most of the 21st century. So there's room also to increase interest rates in Japan. So it's quite a bit of divergence, in part explained by different inflation dynamics.
So is this level of policy divergence, is it unusual, or are we just returning to a more, country-specific monetary cycle after years of, synchronized, tightening?
I think it is going back to what we saw in the long aftermath of the global financial crisis. We saw much more synchronicity in the wake of COVID, because the supply disruptions and the pent-up demand that was created during COVID led most central banks into a tightening cycle post-COVID to get those inflation rates down. But now what we're seeing is something, you could say, some kind of normalization which occurred between the end of the financial crisis and the beginning of COVID, which was a lot of monetary policy divergence, particularly between the United States, Europe, Japan, and the UK.
Would the ECB expected to hold rates? What signals will markets be watching for in President Lagarde's guidance?
Well, I think it's interesting with Europe, growth is quite sluggish. The inflation rate is down to their range of about 2%. It's expected to fall, the underlying inflation rate, to 1.9% in 2026. They're expected to remain on hold, and yet private capital formation, private investment has been sluggish. So I think markets, in terms of forward guidance, are going to be looking for signs of easing in 2026, which will help spur private investment. Although planned increases in defense spending in the big European countries will probably provide a boost to both public and private investment in 2026.
So markets are pricing in a 25 basis point cut by the Bank of England. What would you say has changed in the UK economy, so far to justify, easing now?
Well, it's interesting. We saw the economy, and this is only 1 month, but you saw the economy shrink slightly in the month of October. But that contraction of real GDP in the UK in October followed 4 months of absolutely zero economic growth. And so you saw also a budget in the UK that weighed on the side. It was a mix of austerity in terms of government consumption and some planned increases in government investment. And so given the UK budget was tighter than expected, more austere than expected, and you've had now 4 months of zero growth and then a contraction in October, and not really a strong or robust outlook for the remainder of this year, that's given the Bank of England quite a bit of space to reduce interest rates.
All right, thank you so much. Julian, it was great having you. Julian Cariguesa, economist and former special advisor to the Ministry of Finance, Canada. Thank you so much.
Thank you for having me.
All right, very quickly now to all the stories. See, India's wholesale prices that fell 0.32% year-on-year in November, a smaller decline compared to the 1.21% drop recorded in the previous month. That's according to government data released today. The November figure came in above economists' expectations, as the Reuters poll had projected wholesale prices to fall by 0.6% year-on-year for the month. The moderation in the wholesale price decline was attributed to food prices decreasing at a slower pace during November, according to the data. Then we see Korea's zinc shares surge today after Reuters reports that the company's board is set to discuss plans for a major smelter project in the U.S. All right, those are the top stories for this morning in the global economy. Definitely give you more updates at 1:30.
Thank you so much, Ladi. And that's it on Business Morning this Monday morning. Thank you so much for starting off the week with us. As Ladi said, it's the last full week, so we have to maximize it. So I'll be back tomorrow morning, God's grace, for a fresh episode of Business Morning. But at 1:30, Business Incorporated will be here, and Ladi will be taking you around the world of business in 25 minutes. That's at 1:30. I'm Ini John Mekwa. Make some money. Let's meet tomorrow.